folks, Jim here from FX Charts. Thanks for tuning in this morning. Well, there was a little bit going on on Friday despite the long weekend in the States, although most currencies ended up pretty much where they started the day and no real damage was done. The themes though remain pretty much unchanged, that of yen weakness in particular, and also the Aussie that was under a bit of pressure on Friday. The Aussie was given a bit of a reprieve over the weekend though after the official Chinese manufacturing data, and having closed at 91 cents, it opened this morning at 91.30, and could get a little bit of help today if the HSBC manufacturing PMI, that's due for release later on today, and if that's better than expected as well, then the Aussie might bounce a little bit. Although we've just had the manufacturing PMI out for Australia and it's a fair bit lower than normal, so that's going to cap the enthusiasm to buy it too much, I think. There's going to be a fair bit to keep the market on its toes later in the week though, starting with the PMI data today out of Europe and then the States, and then we've got interest rate decisions from the RBA tomorrow, the ECB and the Bank of England on Thursday, which will also see the UK Chancellor's autumn statement. Also we've got the GDP data later in the week from the EU, from the US and also from Australia. And then on Friday we've got the US unemployment and Non Farm Payrolls. They're expected to be 7.2%, that's an improvement from 7.3%, and a reading on the non-farms of 185,000. Now as we go to the charts, we'll go and have a look at the euro to start off with. Let me just get the euro up here. So that closed, it got up to 136.20 on Friday. It topped out there and then it just eased back. It's trading just under 130. It's trading around about its close really, 135.90. The short-term charts do look a little bit soft. Don't really think we're going too far anywhere. The 4 hours are pointing a little bit lower, so we may see a bit of weakness. But if we came back down, the support at 135.60, some minor support there. But if we came back down to 135.30, it wouldn't surprise me. But I don't think we're going much lower than that. So today I would use for 135.30, 136.10, somewhere around there as a range. Dollar yen. Well, the yen remains under weakness, under pressure all round really, both against the dollar and on the crosses. And that looks it's going to continue, although it has to be said on the 4-hour charts we've got some bearish divergence here, so I'm not sure that we're going to go much above 102. Well, 102.60 was Friday's high, not sure we're going to go too much above there, and we could come back down and sort of test this support line here, which is around 101.80 or so. Don't think we're going too much lower than that today, and I'll probably use 101.85 to 102.60 is a bit of a range. In the longer term though, I think we're headed higher, and as we've said many times before, this 103.70 area remains the first target. Cable, well, that got up to, we need to look at a daily chart here, it got up to the January the 1st high of 163.81, actually saw 83 trade on Friday, has come back off a little bit, it's only 10 points below there though, but there is a bit of bearish divergence on the charts, and I just think we've come up a fair way now in the last couple of weeks. So I think we could see a little bit of range trading here before ultimately heading higher. The 4-hour charts, once again, they're just showing that maybe we do want to take a bit of a breather. Ultimately, I think we're going higher. We're probably going up towards 170 or so. Let me just blow that up a bit. And if we can take out this top, then really the next resistance looks to be up around here, so 164.5. Not an awful lot really though, but below ahead of 166. So, but I do think that possibly we could see a bit of a retracement back down to 163, perhaps even down to the former channel top. That's around 162.60. Certainly be a buy down there for the next leg higher. Dollar Swiss. Well, that's trading within this channel. It's holding above 90. I suspect it'll continue to do so. Eventually, I like the dollar higher, but it's too early to talk about that yet. The 4 hours are flat, mildly positive. We could do with taking out 90.70 really to move on towards 91, and then to the top of the range around 91.40. The Aussie. I'm not sure if the Aussie's trying to form a bit of a base here on the 4 hourly charts or not. ideally for the head and shoulders, I wouldn't mind it coming back to look at this 92 area again, 92 and a half, and then we can make room to head down towards our final objective, really, which is down here around here at 87 3/4. That doesn't look like happening for some while yet, though, and we could have a bit of a squeeze around here. But above Friday's low of 91.55 and below the neckline, which is now at where is it, 92.70, call it. So as long as it doesn't go above there, then I think we're probably okay, and the head and shoulders eventually will play out with interim support ahead of 87.80, of course, at the 2013 low, which is at 88.48. The Kiwi, that's gapped up a bit this morning. We've just had some very good terms of trade out for the Kiwi, so that's made a move a bit higher, but it's still under the neckline of the head and shoulders, and I think this sort of 81.70, this is a 200-day moving average. While that's and the neckline hold it, then I'm expecting an eventual run down to 78.5, and that's where the head and shoulders objective is. Above 82 would have me worried, and certainly above 82.25 I'd be getting out, because there'll be a lot of stop losses going off up there. If we do head higher, then possibly look to sell it up around here, so 82, 80, 83 again for another leg lower. But until then, I kind of like the head and shoulders, and looking forward to the move, as I say, to 78.5. There's a fair bit going on in the crosses, so I'll try and work out a video for that and come back with one of those later on today. In the meantime, have a very good day's trading, and we'll talk to you later. Cheers.